Hello, boys and girls. Welcome back. This is the Forex Market Preview. If you don't know what this is, I don't know how you found your way here, but if you don't know what this is what we call the Forex Market Preview. And normally, on a given week, I come in on a Sunday or a Saturday just before the market opens, and I talk with you guys a little bit about what I think is going to happen in the week to come in the Forex market. And you can take that information and use it to supplement some of your own technical analysis or some of your own ideas. You can foolishly listen to it as though it is the word of God and trade specifically off of that information. Or you can completely discount it and write nasty things in the comments section. I hope what you do is you use the Forex Market Preview to your advantage in trying to learn the skill of trading, because ultimately that's what I want to try and do, is teach you guys about trading, specifically using the currency market and those of you guys who like currencies. But however, on certain days, I like to deviate from standard operating procedure of the Forex Market Preview and actually move into strictly educational stuff. And so that's what I thought I would do this week in the Syndicate, which is it's a paid program that I have. Each morning I do something called War Room. And in War Room, what I do is we come in and gather as a group, and I share with you, much the same way that I'm doing right here in the Forex Market Preview, exactly what I think is going to happen that day. And I also post my trades out to you guys that I'm taking, where I'm entering, where I'm exiting, that kind of stuff. And Akil does that as well. Now, we do that for educational purposes, again, not as like a signal service or something like that. But I place those trades so that we can talk about them, so that when we come back the next day, we can look at it and say, hey, look, we made a bunch of money, or didn't do so well. And here's what happened, and here's what we need to be thinking, and here's the emotions that are going through your mind right now, and I know what you guys are, basically I know where you're coming from. Here's what you're dealing with. Here's how we overcome it. So we deal with the psychological as well as the technical inside of War Room and the Syndicate each day. And Akil, of course, posting his trades as well. Akil is one of the traders for Trade Empowered, and he posts his trades as well, and also does some videos and other things that you all get when you're part of the Syndicate. But I wanted to take some of the stuff that we talked about in the Syndicate this week and actually share it with the thousands of you all who watch this show every week. And come to think of it, I haven't made a shout out yet, but do you know that there are over 30,000 people, I think it's 32,000, almost 33,000 people now who are subscribers to the Forex Market Preview YouTube page. And for those of you, I haven't even sent out an email about it yet, but in addition, after you're done watching this, I recently got back from a trip to London. And while I was in London, I gave a speech at the Money Show, basically around the methodology, kind of the rationale, what we've learned over the last 4 or 5 or 6 years of teaching traders and training them on, how to become consistently independent, consistently profitable traders. And it is I think it's one of the better and more insightful things that I've ever taught, mainly because I was trying to speak more towards really not a group of new people. I was trying to speak to really the community as a whole, both educational and traders, and try and explain a little bit about, here's what we're doing at our company. Here's how we're kind of changing the way education is done and the way teaching of trading is done. And here's the methodology that we use. And it's almost as though you were going to learn about a college and how a college thinks about education. I really tried to present the information in that sort of format while it's at the same time keeping it fun and interesting. And so if you guys have an interest in checking that out, it's about an hour long. And although the audio is not great, and I'm sorry for that, I don't have any control over that. It was the video that they sent me. The content itself is really, really good. So go and check that out after you get done watching this video. But if you will indulge me for this week, instead of going through and taking a look at the market and doing the normal Forex Market Preview that we typically do, I want to do some training with you guys. So let's go ahead and get started here. Now this is one we're going to look at Aussie dollar here in a minute. But I want to take a look at pound yen, and I want to show you guys a very simple pattern formation and a way of entering these trades that you may not exactly be used to. And most people think of entering the market when they think about entering, they think about entering what we call at the market, which means I want to buy, so I'm going to buy now. And they click that buy button or they click that sell button, or they think about entering what are called limit orders. So they'll think of it in terms of saying, okay, if the market will come back, if we'll get a retracement back down here, then I'll enter when the market hits there. And what I'm going to talk about with you on the pound yen trade is what we call stopping yourself into the market. And that is going to be really confusing to a lot of you because most of you think of stops as stop losses. And if you place a stop when you're already in the market, that is considered to stop the loss, or it's a stop loss. But what if you have no position on and you hit a sell stop or a buy stop? What does that actually do? Well, when you have no order on and you put in a sell stop, when the market hits a certain price point, then you're going to get short. It's essentially going to put you into the market. And I refer to this as stopping yourself into the market. And so that's what I want to look at today. I want to show you guys a situation that's setting up and how you can use a buy or a sell stop to put yourself into a position. So let's take a look at this here. Now, this is a pound yen on the hourly chart. Hang on, let me have a drink of my coffee. Oh, it's so good. It's called Lifer's Juice for a reason. Okay, so we have the long downward movement here, and if we kind of take a look at this, we just draw this line in, and then what we get is I'm gonna show you kind of what we were seeing. So when we started looking at this, we were really trading, doing something like this. So we had this very long downward movement, and now we had kind of this rally back up. And so I had identified and showed my traders, okay, take a look at this, guys. See how this kind of puts together a little, what would be called an ascending, an ascending, ascending channel. Excuse me. God, I'm having a brain freeze here. It's an ascending channel. So we've got a channel that's moving slightly upwards. Now I'm going to kind of collapse this and roll this together. And I want you to pay attention to what this looks like. Okay, so this was what we saw. Now remember, this is what we were looking at when I was showing it to the traders before we ended up placing the position. Now, this is what's called a flag formation. Now, it looks kind of weird because it's upside down, because it's a bearish flag formation. But if we had the same thing going the other direction, it would look something like this, where you'd see a large rally, and then the thing would come down like this. And when you look at it like that, you can clearly see, well, that actually does kind of look like a flag. And the more extreme the rally tends to, as a rule, and there are always exceptions, but tends to, as a rule, be a higher probability trade. So we have a very extreme downward move here, followed by the setup of an ascending channel, giving us an inverted flag formation right in here. So I said to traders, here's basically the concept that we're working with, is that we know that these tend to break out in the direction of the pole. So whatever direction the pole is going in, that tends to be the direction that we see a breakout of the continuation of the trend. So in this case, if we're looking at an inverted flag formation, we would expect the market to break out to the downside, right? One of the hiccups that we have with this is we have no idea how long it's going to take this flag formation to finish itself out. So number one is we can't be entirely confident that it's going to break to the downside, because sometimes it breaks to the upside. But we know the probability of it, and there's a much greater probability that we're going to break to the downside than we're going to break to the upside. So we've already decided that the path of least resistance is in the direction of the underlying trend, and we want to look for a way to be short. Okay? Here's the issue. Right now, as we were looking at it, okay, market's trading right here, we don't know whether this is exactly the spot where the market's going to break structure, or whether this little channel is going to continue, and it could continue for quite a little bit, right? We could get a little bit more of a rally. This thing could go rally all the way back up here, and the next thing you know, as we're watching this thing, right? So let me just draw this in. So we're getting this little down and back again and up and back again. And then we get a little up, more up and back again. Then we get this, comes back down here, and then it goes all the way up here. I mean, goodness gracious, we were looking at, this formation coming in, and market's trading somewhere around 180.40s. And we're looking at potentially this thing can run 81.86s, over 140 pips higher, before we could potentially get a break, and there's no guarantee that the market would actually break up rather than down. Are you guys following me? Does this make sense? This is where we really get into some frustrating issues about trading, because it's not just about, in order to trade effectively, you have to get three things right. You have to choose the right currency pair, or what we consider the right market. You have to hit it at exactly the right time, and you have to hit the right direction. So those are the three things that you have to do: market, time, and direction. You have to get all three of those things right in order to be able to in order to have a profitable trade. And so the difficult part becomes is we see these sort of setups and we say to ourselves, oh yeah, I remember that. Jason talked about that, and I know the highest probability is that the market's going to break to the downside. And so I'm going to go ahead and short the market. And then wouldn't you know it, 150 pips later, you're eating crow and the thing hasn't broken out yet. And you're going, well, when is this thing going to break out? I don't know. So you checked the right market. You had the right direction. You just didn't have the right time. And so the question becomes, how do we overcome this? Or how do we begin to mitigate the risk of not seeing the market rally 100 points against us before it actually ends up doing what we want it to do? Because remember, if we rally all the way up here and we ended up shorting it, somewhere back in here, well, guess what that means? That means to get back to even, we have to make 150 pips. In order to get into profit, we've got to do significantly better than that. So it becomes a problem. So again, let me drag this back so we can talk to you about exactly what I was seeing during the time that we were looking at this potential flag formation. So here's what I did. You see this little dotted blue line here. What I did was the market had actually kind of had put in this initial low and had rallied up. And I said, here's what we're going to do, traders. This market, the low, and let me widen it up here so we can see it. So the initial low came right down in here, and I said that low sits at 179.99, basically $180. And I said, here's what we're going to do. We're going to set sell stops at 179.93. So if this was the if-then thought process that we were working through. If the market breaks down to the downside and ends up coming through the previous low, because if you remember, take a look at this. Oops. We've got new structure low, lower high, lower high, lower high. And I said if we violate that lower high by the sum total of, I think we had 179.92s was our entry, by a total of 8 pips, then we are going to get short. And so I placed a sell stop order at 179.92s. And since I had no position in the market, basically what I was telling my broker to do was if the market hits 179.92, I want you to execute a market order to sell X number of contracts or X number of X number of lots. And that's what I put into my what I told my broker to do. I put in a sell stop. Now, as you can see, the market did not initially after that test. We came back down in. We retested. We almost got filled, but we didn't. And those of you who are in the syndicate will remember me talking about it and saying, well, we almost got filled, but just couldn't quite get there. And the market rallied back up. And then where did we go? Look left. Structure leaves clues. Market came right back up in to test that resistance level. And then, boom, we rolled over. Bam, we get filled, 179.92. Yay! And then all through the London session, we rally back up. And where do we end up going? Look left. Structure leaves clues. Previous structure resistance becomes resistance, becomes resistance. And the market comes back up into retest, and then, boom, we fall over. We move from a state of loss into a state of profitability, and then the market rallies back up. Where do we rally back up? Look left, structure leaves clues, previous structure support. support, support, ends up becoming resistance. Didn't quite tap it, but you guys get the idea. And guys, this is a very simple process. So a lot of trading is understanding the basic probabilities about what you're doing. So what are the odds if I do this that I'm going to be right? Well, Jason, about 60% of the time, these things will break in your direction. All right, well, if 6 out of every 10 times I take this trade, I know that it should go in my direction. And there's a great book. I talked about it with you guys before. I've done a little bit of discussion about it. Bulkowski's book on chart pattern analysis, the Encyclopedia of Chart Patterns, where he actually has gone through and done a lot of study on this in determining what the percentages are of these particular things happening a certain way and how far they tend to move. And you can really geek out on that kind of book if you want to in trying to look at all this stuff. And if you're treating this professionally, I would highly suggest at some point you actually go back and do that. But more than that, more than having you go back and do that right now, what I really want is for you guys to understand conceptually what you're trying to accomplish. There are 2 questions that you really need to answer. Number 1, what is the probability that I will be right? Question number 2, what is my risk to reward ratio? So I know I'm going to be right 60% of the time or 70% of the time, and I've got a 1.25 or 2-to-1 risk-reward profile. Guys, those odds are phenomenal. And all you have to do after that is just continue to trade the plan. What we really run into, and what I discussed with the traders this week in Syndicate, was what tends to happen is we allow past trades to affect our current trading decisions. We allow past history of the last 3 or 4 trades to affect how we manage and how we control this trade. And unfortunately, guys, once you start operating outside of the realm of probability, now all of a sudden things start to break down. This is not a game that you are going to master. It is a game that is constantly going to challenge you. And the way that you stay consistent, if you want to get the consistent returns, you have to continue to act in a consistent way. If you don't act in a consistent way, you can't possibly expect to get consistent returns. So we want to know the probability, we want to know the risk reward, and then we want to take advantage. But that's a great way, using stops to stop yourself into a market that really protects you against, undue risk in the marketplace. Now, let's take a look at one other one. And I was going to use Aussie dollar as an example. This is another one. This is another one that went well. Now, I will tell you guys, just so you know, I picked 2 that fulfilled and were great. We had lots of losing trades this week as well. So I'm not going to, for those of you who are there, you're like, yeah, Jason, you picked 2 of the really good ones. But no, we had several that did not go our direction. And as I tell these guys, it's 2 steps forward, 1 step back. And we're starting off the year. We're just we're getting back into things. And we had a couple of good trades, and we've had several bad trades. So that's just them's the breaks. So I don't want to give the false impression that, oh, look at all the winners that we're having in the syndicate. Because you come in there, you're going to learn real quick. It's not all roses and fairy tales. It's real trading in that room. And those are real results that you're seeing come out of there. So anyway. Let's move back over to Aussie dollar here, and I know I'm running long here. This is going to be a longer lesson than we usually do, but hopefully you're going to gain a lot of really valuable insights out of it. So I'm going to delete all this stuff so that we can begin talking about it. So what I told the traders was we went out to the daily chart, and we may have even talked, well, I know we've talked about this in the Forex Market Preview, but let me just explain a little bit about my thought process on this. So we were looking at this ABCD move. This is an ABCD move, and that ABCD terminates somewhere around 81.60. And I said, gang, let's look left and see where the next logical structure is. So I'm now on a weekly chart. So we're going way out there right now on a weekly chart. And the reason I have to go out that far is I can't see any structure. You can see I'm on a weekly chart. I still don't see any structure looking left. So I have to just continue to collapse my chart. And lo and behold, there is the most recent structure level. And that's the low that comes in right there around 80.60s. And the lowest close, if I want to draw that in as well, comes in somewhere around here, around, what was that, 82.11. Okay, so that is the most recent structure level. So let me scoot back over here to our actual area. And now what I've defined is the potential, what Carney would refer to as the potential reversal zone, what you will hear me refer to as the kill zone. If the market is going to mount a rally, the most likely place for that to happen is within these two bars. So then what I can do is I can kind of give myself a little range. I'm going to grab this little rectangle tool here just for informational and instructional purposes only, and I'm just going to box it out. So now we have an idea. Now let's get back down on the daily chart, which is the higher time frame chart that we normally use. And we can see market came down into there. We kind of tested it. We popped out. We came back down. Nothing much happened. And on the daily chart, we don't really have much, but we know that we're inside of the kill zone. If the market's going to mount a rally, likely it's going to do it here. And we've also inside of that ABCD completion. So now I'm going to jump down to my hourly time frame. And lo and behold, look at what I see here. I see, boom, the double bottom coming in. And then I see the pop, the market start to rally out of that double bottom. So yes, the double bottom did come in outside of our little support and resistance area. But remember, we're making guesstimations. The market isn't perfect. We're dealing with probabilities. We're dealing with approximations. And I'm looking at this and saying, well, yeah, that's a pretty nice little double bottom that's set up there. And now the market's kind of rallied up out of there. And I said to myself, let's take a quick look at a risk reward on this trade. Well, and I'm going to delete this little deal here now so we can see a little bit better. And I'm going to delete the range that we were talking about too. So now we're just really dealing with, this is the support level. And I'm going to start making some assumptions. Now, when I decided to enter this trade, the market was basically right here, or right around here somewhere. And I can't remember exactly the entry because I don't have it up. But essentially, I ended up buying up the market, somewhere around 80.72s. Okay, so I ended up buying right here. And it would have been over here because the double bottom was in there. So I ended up buying up in here at around 180.72s or something like that. And the reason I did that for one reason and one reason only. Number one is everything else, the dollar was getting hammered. It was like trading in the pound or the euro was like catching a falling knife. But where the euro and the pound had been making progressively lower lows, the Aussie dollar was struggling as it came into this support zone. So I said, well, you know what I'm going to do? I'm just going to take a shot. And you hear me say that a lot inside a war room. Well, we're going to take a shot. And why do I want to take a shot? Well, let's take a look at it. I know that a lot of things are happening here. I got a double bottom. I got bullish divergence. I'm inside of a major structure support level on the weekly time frame. A lot of things lining up. And I can look at this and I can say, well, okay, I had my stops at 180.26s was where we had the stops. So I take my deal here. I go from my entry, 180.26s or 25. I think it was 25s is where we had it, but you get the idea. One pip here or there. And then I said, where could this market potentially go? And I said, let's look left. And I see the top of that channel coming in right there around 82.12s. And so I drew a little line in here at 82.12s. And I said, actually, what did we do here? What? No, I'm sorry. We did it, because we took a look at this and we came in just short of that, right in there at that cycle top at around 8200s is where we were. That's what it was because we're near the 82 handle. Sorry, guys. I'm trying to remember. We did a lot of stuff last week. So the 8200s level, we got right at that level. I think it was 81 something. But basically, we looked at the 82 handle and we said, let's get underneath the 82 handle and look for our targets there. So I draw in my potential risk to reward on this trade. Take a look at that, guys. I'm just going to grab this line and show you. 1, 2, 2.25 to 1 risk reward profile. Pretty doggone stinking good. And Market ended up rallying. We traded sideways. The market rallied. As we traded sideways and made new structure highs, we rolled our stops. Boom. All the way up to hitting our target at around 181.78. Ended up making about 74 pips or so on this move. But again, guys, what are the two questions that I'm asking? What's the probability that I'm going to be right? And then number two, what is my risk to reward? That's really what I want you to take away from these two examples that I've given you today is, what do I stand to make if I'm right versus what do I stand to lose if I'm wrong? And what is the probability on this particular trade that I'm going to be right? And for those of you guys who don't know how to do that, you're like, well, how do I know what my probability is of being right? Well, that's why we tell you to back test. That's why we tell you to formulate your plan of attack, get that trading plan together, and then go back and test that plan and find out, am I right 55% of the time? And am I right 60% of the time? Am I right 40% of the time? Because folks, you can be right 40% of the time, less than half, and still make very good money if your risk to reward is always good enough to cover the disparity in your percentage of the time right. So there are all kinds of different ways to make money. And what we try and do in the syndicate is I really limit us to just a few different strategies that we use in there based around technical analysis. But my point being here is as you go out through the rest of this week, those are the two critical questions I want you to ask yourself. Do I know what my risk reward is on this trade? Do I know where I'm getting out if I'm right? Do I know where I'm getting out if I'm wrong? And do I know what are the odds if I take this trade that I'm going to be right and we're going to hit my targets? And guys, if you don't know those two things, then my advice to you is stop trading immediately. Stop trading. Go back to the drawing board. Do the hard work that's necessary. If this is just a fun game to you and it's kind of like going to the casinos and if I lose $500 or if I lose $1,000, it's really about the fun of being able to go and the excitement of being in there. That's really what I'm paying for. It's the same as if I would go to the movies or if I would buy a gun or whatever somebody else does with their free money. I like to waste my money trading. Fine, that's fine. Go ahead. But if you're really serious about treating this like a business, then stop trading. Go back to the drawing board. If you want to make money at it, then treat it like a business. Do those things that a professional would do before he would invest his money, before he would lay it on the line. And see if it doesn't just change radically, not only your perception on the market, but also your confidence level and ultimately your success. So I challenge you guys to go out and do that this week. And of course, if you want to join me in the syndicate, you can do that. There'll always be a link underneath the YouTube video for you guys to go back to that, or it's just tradeempower.com/syndicate if you would like to get there that way. Other than that, I'll see you guys next week for another edition of the Forex Market Preview. Until then, good luck and good trading.